MBA Research and Curriculum Center and NOCTI have collaborated on this microcredential. This microcredential deals with internal controls used in accounting to meet organizational needs and consists of 4 targeted skills. This targeted skill explains legal compliance. Generally Accepted Accounting Principles, GAAP, constitute a framework of accounting rules, standards, and procedures developed by the Financial Accounting Standards Board, FASB. It sets accounting and financial reporting standards for companies and nonprofit organizations in the U.S. The overall goal of GAAP is to improve the consistency and comparability of financial reporting. Adherence to GAAP standards is required for a publicly traded company. This is because these companies are regulated by the U.S. Securities and Exchange Commission. Publicly traded companies must use GAAP-compliant financial statements. GAAP standards are optional for non-publicly traded companies. It is always important to have consistent accounting practices and procedures with guidance from GAAP. Fraudulent activity is a problem that requires vigilance among accountants. Legal compliance is essential for every business. Taxes must be filed at the local, state, and federal levels. For publicly traded companies, earnings must be reported, and investors must be paid. All businesses, except partnerships, must file an annual income tax return. There are 5 main types of taxes for a business: income, estimated, self-employment tax, employment tax, and excise tax. Which of these are paid depends on the type of business and its ownership. All of these actions require accurate, reliable financial information. Federal income tax is paid through withholding. Estimated tax is based on income and is paid quarterly. Self-employment tax is a Social Security and Medicare tax primarily for individuals who work for themselves, earning more than $400 annually. The employment tax on wages and tips is paid through the W-2 wage and tax statement. An excise tax applies to manufacturers of certain products or businesses that operate heavy equipment, as an example. In addition to taxes, other standards and laws are important to know. Complete records are the goal of a business accounting system. Bookkeepers must record all data relating to business transactions, including the revenue, expenditures, dates, amounts, and any other pertinent information. Employees who commit fraud are motivated by perceived need and see an opportunity to commit fraudulent actions. They justify their actions through rationalization. They tell themselves that they aren't really stealing since their salary is low, or some similar thought. Several scandals occurred in the early 2000s at big companies due to accounting fraud by key employees and failures of internal accounting controls. In the wake of several scandals involving accounting operations at large corporations, a federal law, the 2002 Sarbanes-Oxley Act, was enacted. This law was enacted not only to protect investors who lost their life savings when several companies collapsed, but to prevent this from happening again by improving internal accounting controls, independent auditing, and public disclosure. Section 301 of the Sarbanes-Oxley Act states that corporate officers who knowingly submit a non-compliant financial statement can be criminally charged. Section 404 requires establishment of an adequate structure of internal accounting controls, plus an assessment of their internal controls regarding financial reporting as part of their annual report. Although most of the Sarbanes-Oxley Act apply to publicly held companies, private companies that adhere to these regulations benefit from better operations and are less likely to face litigation. Certain parts of the Sarbanes-Oxley Act apply to private companies. For example, Section 806 protects whistleblowers from retaliation. A whistleblower is a person, often an employee, who reveals information that is considered illegal, immoral, illicit, unsafe, or fraudulent. Also, a business can face criminal charges for destroying, altering, or falsifying records or documents that would be needed for a federal investigation. Internal accounting controls help a business maintain financial integrity to achieve legal compliance and to help protect a business from loss of assets due to accounting mistakes or fraud. On a final note, bookkeeping entries must be accurate. Complete records can include receipts, invoices, or purchase orders, as they will be the basis for accounting and auditing procedures.